Hello and welcome to NITYA Tax Associate Roundup for September 2022. Every month we bring you this series of Roundup where we tell you about the recent changes in indirect tax laws, recent news, some important topics. We also discuss some important case laws with you. So after our August 22 Roundup, this roundup, we are again discussing all the changes that came up in the past 1 month. So at the end of the session, we will have a question answer round where we will encourage you to raise your hands and ask questions. We have also received some questions on the chat box or at the time of registration when people had raised their queries. Some of these which relate to today's topic, we will try and cover those. And the ones which are not related to the topic, we will skip those and we will request you to send separate mail to us so that we can take up those queries. So insofar as the recent changes are concerned, the government has been proactive in bringing certain guidelines. They've issued instructions as regards issuance of summons, arrest and bail, also for launching of prosecution. So as regards issuance of summons, the guidelines prescribe that summons should be used as a last resort. It should not be upfront that summons be issued. So if it is only some records are being called, then a letter can do the purpose. Or if the records are already available on GST portal, these are statutory records, then no summons should be issued because the officer can download from the portal. Also important is that summons should be issued by an officer not below the rank of superintendent, and that also after obtaining a prior written permission from assistant commissioner or deputy commissioner. Now the reasons need to be recorded while issuing summons. The summons, what is the purpose, why a person is being summoned, that needs to be recorded in writing. Secondly, it is very critical that directly summons cannot be issued to senior managerial persons or key management people. So, especially in case of companies, PSUs, unless the officer has evidence of direct involvement in the decision-making process by the senior management person, that person should not be called through summons. Also, very important is that all summons need to bear DIN document identification number. Secondly, if a person is not responding to summons, even after 3 occasions, then that can be treated as a non-compliance and the officer concerned may file a criminal complaint before the judicial magistrate. Also important, now we come to the arrest and bail. So again, because arrest is directly impacting the personal liberty of a person, which is violative of his fundamental right under Article 21. Therefore, there are specific conditions prescribed for arrest. That the reason should be unambiguous, clear, and there should be credible material. Those reasons need to be recorded. Only an officer not below the rank of commissioner can authorize arrest of a person. So the authorization can be given to any other officer who could be of any rank, but the authorization must come from the commissioner. And before giving that authorization, the commissioner must have those reasons to believe based on credible material, and the material must contain the intent on the part of the accused person who is to be arrested that he has evaded tax with clear mental element. Also important is that arrest can also be made where there is a need to ensure proper investigation. So Supreme Court laid down certain guidelines. Now, apart from those guidelines in these instructions, the guidelines which they provide that arrest can be made if the officer feels that there is a need to ensure proper investigation or there is a possibility of accused tampering with the evidence. Now, these are very subjective terms. So, in these cases, while there is objectivity, some objectivity provided in the guidelines, still there are subjective issues like need to ensure proper investigation. This is very vague as it could be. And this can be misused to arrest a person on the pretext that the proper investigation could not have been conducted otherwise. Now, the guidelines also prescribe that no arrest should be made if the person is cooperating in evidence, is complying with the summons, is furnishing the information timely, voluntarily pays tax. Now, this is very strange. I mean, if a person is pays tax as desired by the department, then he will not be arrested. But if he does not pay tax, he could be arrested. So this is a gray area. Also, technical cases involving interpretation of law or difference of opinion, the person should not be arrested normally. So procedure for arrest is already, much has been said, and these are similar to, the grounds of arrest. Everything needs to be mentioned in the arrest memo. It should contain a proper valid document identification number, etc. And the officer has to follow the guidelines given by Supreme Court in DK Basu case, which is like informing the close person, taking him to the magistrate within 24 hours, getting the medical examination done, a female to be arrested by another female. So there are multiple guidelines that were issued in DK Basu's case, and those guidelines were then incorporated in the Code of Criminal Procedure. So those guidelines have to be followed by at the time of arrest by the arresting officer. Now we come to launching prosecution, because typically what happens in wherever there are cases of evasion, these are followed by launching of prosecution, and Section 132 deals with it in what cases prosecution can be launched. So again, it is very clear that only a commissioner can authorize sanction the prosecution of a person, and it should be only against actively participant in tax evasion. A person who is actively participates in the tax evasion, only he can be prosecuted. So for instance, in case of a company, not all directors can be prosecuted. Only the director who is directly concerned in day-to-day affairs, who takes the decision making, which results in the tax evasion, only that director can be prosecuted. Again, cases of technical nature or difference of opinion, etc., need not be prosecuted. And it is important, as we saw in case of arrest, here also, intent of guilty mind, fraudulent intention, mens rea, all these are that must exist by the person who is proposed to be prosecuted before launching any prosecution. Now, if a person is arrested and is not granted bail for 60 days, because after 60 days, there is a default bail provision under Criminal Procedure Code. So within 60 days, criminal complaint needs to be filed with the magistrate. Then the person will not get default bail. Otherwise, the idea is that within 60 days, authorities must file criminal complaint. So the guidelines prescribe that the officers must present the case within 50 days before the commissioner, and for commissioner to take cognizance and then sanction the launching of prosecution. But if it is not possible within 60 days, then also they have to expedite launching of prosecution, so that it should be in a time-bound manner, and they should not wait for finalization of adjudication proceedings. So what happens? The first adjudication level, at the time when the commissioner or any officer is adjudicating, at that stage itself, at the time of adjudication, he can take a view as regards prosecution also, and then inform accordingly. Important thing is that prosecution can be launched only where the value of tax evaded is more than 5 crore rupees. So it cannot be in other cases of a smaller value. So monetary limits have been prescribed, and for different monetary limits, if the tax evasion is between 2 crore to 5 crore, person can still be arrested, but he will be granted bail by the officers, assistant commissioner or deputy commissioner. And in those cases, the punishment for prosecution is also low. So the person can be prosecuted, but the punishment will vary. So these monetary limits must be kept in mind by the officer providing sanction for prosecution. So with this, we come to the next change, which is related to GST portal, and I'll ask Simran, my colleague, who will take the part of the session. So she will take over. Over to you, Simran.
Thanks, DK. Good afternoon, everyone. Now we will be covering the changes relating to GST portal. So post the last GST Council meeting, there were several changes which were notified in the format of GSTR 3B. These changes were not notified yet, but in the GSTR 3B of August 2022, these changes have been incorporated, and taxpayers have to keep a note of these changes while filing this month's GSTR 3B. These changes were majorly relating to change in the format of table 4B and 4D and the reporting requirements in table 4A5. A circular was also issued clarifying this change. You may also refer to our detailed video on this topic, which is available on our YouTube handle. Next, moving forward to customs related change. Lately, the custom authorities have been demanding excess information from the importers. So there were various representations which were filed by the importers with the department. In lieu of those representations, the government has issued a circular directing the officers to be sensitive while applying the Carotar rules and maintain consistency with the foreign trade agreements entered with India with other countries. Next, we'll move forward to the to-dos for September month. As you all are aware that September is an important month from GST compliance's perspective. Before covering the to-dos, it is important to highlight that there is confusion in the industry that this timeline has been extended to November, but importantly, that change has not been notified yet, and the important date to do those compliances is still September 30, 2022. Now, starting with the to-dos, first to-do is availing ITC for financial year 2021-22 in GSTR 3B of September month. So, since this date is approaching, taxpayers must ensure that they are doing their GSTR 2B reconciliation, and in case any invoice or invoices are not appearing in GSTR 2B, they must follow up with their vendors to ask them to reflect those invoices in its GSTR 1. And secondly, taxpayers can also reassess if they have taken any ineligible ITC, or if they have missed taking any eligible ITC. Also, the last date to furnish the details of GST credit notes and rectification of GSTR 1 for financial year 21-22 is GSTR 3B of September month. Next to do is regarding Rule 42 of the CGST rule. As you all are aware that Rule 42 demands monthly reversal of common ITC relating to exempt supplies, and after that a true up is also required at the end of the year. Now, in case when at the end of the year the ITC reversal amount is excess in the earlier months, then the last date to reavail the excess reversed ITC is September 3B. Next, moving forward to the change which is relevant for companies on whom legal metrology law applies. So there are various changes which are to be incorporated in the labels with effect from October 1, 2022. So taxpayers must ensure that they are amending their labels accordingly. I'll quickly cover these changes. First change is regarding mentioning of month and year of manufacturing. So earlier there was a flexibility to mention month and year of packing or import. But now that flexibility has been removed, and companies are mandatorily required to mention month and year of manufacturing only. Second additional declaration which is required is regarding unit sale price when it is not equal to retail sale price. Third important change is regarding like earlier, if any commodity or package was sold by number, then there was flexibility to mention N or you. But now that flexibility has been removed, and now the companies have to mention this quantity declaration in the prescribed format only. Also, these LMPC declarations are also required to be made on packages which are part of a promotional offer. Now, moving forward to the news which have come up in the last month. First is regarding the new FTP. The taxpayers can expect new FTP this month, and this FTP is likely to focus on e-commerce exports and is likely to reduce the burden of compliances on small exporters and MSMEs. Second news is regarding scrapping of IGST on ocean freight. This stems up as a result of a Supreme Court judgment which struck down the levy of IGST on ocean freight. So this will be a major relief. Third is regarding CBIC is examining issue regarding applicability of GST on cross charges. Cross charge is a contentious issue under GST, and taxpayers can expect a clarification with respect to this. A group of ministers have different opinion on formation of GST appellate tribunal, and now this issue will be discussed in the coming GST Council meeting as well. The last news is regarding the investigation which is initiated by National Anti-Profiteering Authority on different retailers for anti-profiteering. Importantly, the anti-profiteering provisions under GST are applicable only for with respect to non-passing of tax burden on the consumer when there is reduction in GST rates. But in the recent past, we have only seen increase in GST rates. So these investigations are not good in law. Next, news relates to dropping of demand of excise duty on inclusion of value of drawings and design and accessible value of automotive components. So this issue was very prevalent in the automobile industry, and we represented various clients with respect to this issue, and DGGI has dropped demand in this. You may also refer to our detailed video on this issue available on our YouTube handle. Next, we'll be covering the key topic of the webinar, that is renting of residential dwelling, which is talk of the industry nowadays. Starting with the background, this services by way of renting of residential dwelling for use as a residence were exempt under the service tax regime and were exempt under GST as well till July 17, 2022. But now this exemption has been removed when these residential dwelling are rented to a registered person, and correspondingly the services of renting of residential dwelling to a registered person are brought under the ambit of reverse charge. Now there's a confusion which is prevalent in the industry that when a person who is registered under GST, he takes any residential dwelling on rent in his personal capacity, in that case, whether he'll be required to discharge tax under RCM or not. So here it is important to refer to the press release which was issued post the GST Council meeting in which this decision was made. The press release mentioned that the purpose is to tax the renting of residential dwelling when it is rented to a business entity. Also, the government tweeted with respect to this issue that no GST will be applicable when the residential dwelling will be rented to a private person for personal use. So in cases where an individual is taking a residential dwelling or rent for in his personal capacity, in that case it will not be taxable and there will be no liability to discharge tax under RCM. With this amendment, there are various issues which have come up, like what is the meaning of residential dwelling, then the requirement to take registration and place of supply of this service, then the taxability of supply made by employer to employee. And lastly, the availability of input tax credit to the employer. If we see that the term residential dwelling, it is not defined under the GST law. Therefore, meanings can be derived from the legal dictionaries and in its definition under the service tax education guide. Residential dwelling means a place which is construed for purposes of living or staying of residence. So that means that as long as a property is structurally designed as a dwelling, that is, if it is structurally designed as a place to live in, it will qualify as residential dwelling. So it will not be relevant that whether that property is used for commercial or residential purposes, as long as it qualifies as a residential dwelling. Before moving to the next issue, that is registration requirement and place of supply, we'll quickly run through the poll that we posted on our social media handles. The poll was, is GST registration important in state of location of residential dwelling if it is located in state other than state of recipient's registration? So if we can see on the screen that 67% of the audience believes that GST registration is mandatory in that case, while 32% of the audience has opposite view and 2% of the audience is not sure. Now discussing this topic, firstly we'll discuss the place of supply. Place of supply in this case is the location of immobile property. So it will be the location where the residential dwelling is located. Now talking about the nature of tax which is to be discharged, if the location of supplier and place of supply is in same state, then CGST and SGST is required to be discharged. And when the location of supplier and place of supply is in different states, then IGST is payable. Now, talking about the poll question, if we see that for instance, if the property and the supplier is located in Delhi and the recipient is located in Haryana, then in that case, the recipient in Haryana has to discharge CGST and SGST. Now, since the recipient in Haryana cannot discharge CGST and SGST of Delhi by being in Haryana location, he will have to take registration in Delhi state and have to discharge his liability there. So with respect to the poll question, yes, it is mandatory to take registration in another state where the property is located in another state and the supplier is also located in that state. While in case where supplier is located in Punjab and property is located in Delhi and the recipient is located in Haryana, in that case, the place of supply will be Delhi and IGST will be payable. So that recipient can discharge IGST in all these cases, on all the last cases, by being in his own location. Now talking about the taxability of supply made by employer to employee. Supply includes barter when it is made for a consideration in course or furtherance of business, and barter is not defined under the GST law. It simply means to trade goods or services in exchange of goods or services. And importantly, supply without consideration between related persons is also taxable under the GST law by Schedule 1. So basically, there are two legs to this transaction. One, services provided by employer to the employer. Secondly, services provided by employer to employee. So services provided by employer to employer do not qualify as supply by the purview of Schedule 3, while the services provided by employer to employee, they qualify as supply in our view because there is no bar on their taxability. Therefore, the services of renting of residential dwelling will be treated as exempt supply and there will be ITC reversals under Rule 42. Fortunately, there is a positive material under GST which taxpayers can take ground of. First is that there's a press release under GST which states that perquisites provided by employer to employee in terms of contractual agreement are not taxable. Secondly, there are various advanced rulings under GST which say that supply of facility by employer to employee are not in the course or furtherance of employer's business. Therefore, these are not taxable. Before moving to the last topic of this key topic, that is input tax credit, we'll run through the poll question that we posted on our social media handle, wherein we asked that can a registered person avail ITC of GST paid on renting of residential dwelling availed for employees? 63% of the audience thinks that yes, ITC will be available. 36% of the audience is of the view that ITC will not be available, while 1% is not sure. Section 16 of the CGST Act says that ITC will be available when the services are used or intended to be used in the course or furtherance of business. So the services of renting of residential dwelling are used in the course or furtherance of employer's business. Therefore, ITC should be available in terms of Section 16. Further, there is a restriction under Section 17(5) which restricts ITC when supply is used for personal consumption. In our view, the renting services are received by the employer for official purposes, that is to give the residential dwelling further to their employee. Therefore, it is not used for personal consumption of employer, and this is also supported by various rulings under direct and indirect tax laws. Now, moving to recent rulings, with this, I'll hand over the session to DK.
Thank you, Simran. Okay, so there are multiple rulings, and while we have shortlisted them, we'll try to rush them so that we cover well in time. So first and foremost is the Philco trade. We all know that Tran 1 transitional credit was an issue, Tran 1, Tran 2 issue, and it went up to Supreme Court. Supreme Court directed the government to open the portal for 2 months and allowed everyone, whether they were before the court or not, to file their Tran 1 or Tran 2, as the case may be, or revise if already filed. So government has sought extension of time in this case, and court has allowed 30 days time already. So by 30th September, now the government will come out with the guidelines, and from 1st October onwards, the portal will be opened. Coming to the next ruling, which is in the case of Unicam, again, this relates to transitional credit. Here, the situation was that there is a lot of confusion as regards how to transition ISD credit. So if on 30th June 2017, ISD had some credit and he transitioned that credit through Tran 1 in his electronic credit ledger, and after transition, then he distributed that credit. So government is disputing that there are multiple show cause notices issued. Such show cause notices have gone to Bombay High Court and other high courts. What the court has held is that it is only a procedural issue, because otherwise the eligibility of credit in the hands of ISD and the eligibility to distribute it to the units is not in dispute. If that be the case, then they have given directions that in line with the Philco trade, as and when the portal is opened, the taxpayer can first through invoices, ISD can distribute the credit to the units under the erstwhile law, and thereafter the respective units can file their Tran 1 or revise their Tran 1 to avail the credit, which will then get reflected in their electronic credit ledger. And since they have already utilized that credit in the past, because taxpayer ISD transitioned it through Tran 1 and then transferred to the units, so such this transition now will go back to the original transfer of credit. And as soon as the credit now gets reflected, that credit will stand lapsed because the units have already utilized that credit. So this direction has been issued in Unicam, also this similar direction in Colgate-Palmolive by Bombay High Court. Next, we come to the Westinghouse case, a landmark judgment where Supreme Court held that relays supplied to railways are classifiable under 8608 and not under the respective chapter heading 84 or 85. This review petition was filed by the Union of India, and Supreme Court rejected the same, saying that it does not call for any interference. The classification is correct. Now, next we deal with the Bharat Forge, where Indian Railways had invited bids for supply of goods, and Bharat Forge then challenged that bid documentation before the Allahabad High Court, saying that the bid document or the tender document did not mention the HSN classification of the goods involved. Allahabad High Court ruled in favor of Bharat Forge, and this was challenged by Union of India before the Supreme Court. Supreme Court held that it is the liability to pay GST is on the supplier, which is Bharat Forge, and therefore it is the supplier who needs to determine the correct HSN classification and discharge his GST. This liability cannot be fastened on the buyer. Buyer is not required to determine the HSN and inform in the tender documents. So they reversed the Allahabad High Court ruling. Next, we come to the solar industry. Here is a case where the High Court had denied ITC eligibility on transportation by holding that the transportation of employees has no connection or linkage or nexus with the manufacturing activity. The Supreme Court also confirmed that order, saying that transportation services provided to employees are not related to manufacturing activity, and thus ITC stood denied. Next, we come to liquidator of ABG Shipyard. So here is a case where ABG Shipyard had gone into liquidation. There was a liquidator appointed by the NCLT. And after the moratorium was declared, the Customs Department did not file its claim before the Committee of Creditors. Now, ABG Shipyard had imported goods which were lying in the warehouse. They also imported capital goods under EPCG scheme and had not fulfilled the export obligation. So the liquidator requested Customs Department to release those goods, which were not released. Then the liquidator filed an application before NCLT, and NCLT allowed the liquidator's application, directed the Customs Department to release the goods. The Customs Department went to NCL Appellate Tribunal, which allowed the application of CBIC, saying that there is the liquidator will need to pay the customs duties before clearing the goods. So the liquidator challenged this NCLAT order before the Supreme Court. Supreme Court held that the IBC provisions have overriding effect over the customs law, while all the indirect taxes hold that their tax is the first charge over any goods or etc. Yet the Supreme Court held, after looking into all the jurisprudence, including the IBC provisions, section 238, etc., that the provisions of IBC would have overriding effect, and therefore they set aside the order of NCLAT and held that once the Customs Department has not filed any claim, because after moratorium they also become like any other operational creditor and they need to file their claim before the Committee of Creditors. Having failed to file that claim, now they cannot claim that amount as their first charge. So next we come to Ankush Auto. Here there was a delay in grant of refund under GST, and taxpayer approached the High Court for grant of interest for the delayed refund. And revenue cited Supreme Court suo motu extension saying that interest is not payable because of COVID. The Supreme Court extension order would apply. But High Court held that the law specifically provides 60 days time for disposal of refund claims. Otherwise, interest is payable, which is compensatory in nature. And therefore, for the delayed period, revenue is liable to pay interest. Now, we also have a contrary ruling in this kind of a scenario, which is by the Punjab and Haryana High Court. Here, what had happened is that after filing the refund claim, a show cause notice was issued, and reply extension was filed to extension was sought to file the reply to show cause notice. That was not considered, and refund claim itself was rejected, which was challenged before Punjab Haryana High Court. Punjab Haryana High Court said that in view of Supreme Court extension order, the authority should have considered the extension application and allowed time to file reply to show cause notice. In the same breath, the High Court also held that this Supreme Court extension order applies to the adjudication of the refund claim, and no interest is payable due to extension. Next, we come to FedEx Express. Here, what had happened is that FedEx had provided certain supplies to SEZ units, and thereafter, because it was a deemed export, it filed refund claim. And that refund claim was rejected because the endorsement certificates from SEZ units were not furnished. Now, those certificates were furnished before Commissioner Appeal, but Commissioner Appeal also rejected the claim that he cannot entertain fresh evidence. So, High Court held in this case that fresh evidence can be entertained by the Commissioner Appeals, especially in light of the COVID situation where the taxpayer was not at fault and he procured the documents and immediately made available the same to the Commissioner Appeals. So the matter was remanded for deciding the refund claim afresh. Next, we come to India Yamaha Motor. Here was a case that while there was balance available in the electronic credit ledger and electronic cash ledger, yet the interest was demanded because GSTR 3B was filed belatedly for the period August 17 to October 17. So, court considered the view and held that mere availability of balance in the credit ledgers does not absolve the taxpayer from interest liability on the ground that the tax becomes paid only after filing of GSTR 3B, and therefore there was a delay in payment of tax. In our view, this ruling is not correct because what the court has held is that the credit lying in the cash ledger or the amount lying in the cash ledger or credit ledger is in the control and possession of the taxpayer. Taxpayer can make use of it, whereas that is not correct because that amount is held with the revenue, with the government, and therefore taxpayer cannot use it in the manner he likes or wants. And even if he wants it back, he has to file a refund claim in terms of Section 54. So next is the SRICO projects. So here was a case where advance ruling was filed, but the advance ruling authority rejected the same by holding that DGTI proceedings were pending in the matter. So the court found that while the advance ruling application was filed in May 19, whereas the DGTI notice was issued in December 21. So this was a subsequent development. Also, court interpreted the term what does proceeding means and came to the conclusion that proceeding does not include inquiry or investigation, but proceeding should be understood as to the question that has been framed whether the same is pending or has been decided in the case of applicant. If it is so, then definitely the advance ruling application is not maintainable. But if such an application is not pending or decided, then it cannot be said that any proceedings are pending. Next is the case of Johnson Matthey. Here, what had happened is that for the appeal filed before Commissioner Appeal, under the erstwhile laws, the taxpayer had to deposit 7.5% pre-deposit, which it deposited through its electronic credit ledger and reported the same in GSTR 3B. That was rejected by Commissioner Appeal, holding that the pre-deposit is not proper. The taxpayer went to tribunal after depositing another 2.5% through electronic credit ledger and reporting in GSTR 3B. And so the issue before tribunal was whether the pre-deposit of erstwhile taxes for the purpose of filing appeal under Section 35F can be made through debit of electronic credit ledger and reporting under 3B. So this for this, the tribunal took note of Section 41, saying that the balance in electronic credit ledger can be utilized only for payment of self-assessed output tax liability and not for, and for no other purpose. So pre-deposit is not included in that, and thus the tribunal rejected the claim of the petitioner, but allowed 4 weeks time to petitioner to make pre-deposit. In our view, this is not a correct position because one, Section 41 was amended and it removed this clause of utilize only for the self-assessed output tax liability. Also, there were other judgments that were cited. There were two circulars of board that were cited. There was a tribunal decision itself that was cited, and there were other cases where the electronic credit ledger amount was allowed to be utilized for other purposes. So all those decisions were not correctly appreciated by the tribunal in this case. Next is the case of LG Electronics. Here, what had happened, LG Electronics, different factories of LG had cleared sub-assemblies and parts of color television. And these color television sets were cathode ray tube televisions. So they had cleared sub-assemblies and parts to different factories, manufacturers. They classified this under 8529. And no picture tubes and printed circuit boards were cleared along with this. Also, the timing of clearance were varying. These were cleared at different points in time. What the authority held is that no, these are classifiable under 8528 as a complete color television set, and they applied interpretative rule 2A. So what the court held is, in this case, is that tribunal held is that rule 2A applies only if all components which form part of finished goods are removed together at same point of time. So when presented before the authorities, these represent as a complete unit. So that was missing in this case. They said that one, it has been clearances from different factories. Two, it is at different point in time. Three, the critical products like the picture tubes and printed circuit boards are not there. Therefore, Rule 2A is not applicable, and the classification change, which was changed by the authorities, is not valid. Next is the Toyo Inc. Judgment relating to Senvet credit, and I had the opportunity to argue this matter here. What had happened is that Senvet credit was denied because the original invoices, bill of entry, etc., were not furnished. So the matter was remanded to adjudicating authority to verify the receipt and use of goods in the factory. Similarly, credit was denied on GTA services, which were used for outward freight, and again the matter was remanded to verify that the transaction was on FOR basis. But credit was allowed in case of furniture used in quality control lab of factory, outdoor catering services provided to employees, rent-a-cab services, maintenance of hired cars, again used for business, and hotel accommodation services. So on these categories, credit was allowed. Next, we come to Malabar Cement Advanced Ruling, Kerala Advanced Ruling Authority. Here, taxpayer had availed services of transportation of employees through non-AC buses. So on the hiring, he asked a question whether ITC is available. So the authority held, yes, ITC is available on the portion that is not recovered, that is borne by the taxpayer. But if any portion is recovered from the employees, to that extent, ITC will not be available. In our view, this is not a correct view that ITC is not available on the amount collected or recovered from the employees. Next is the Troika Pharmaceutical. Here, this is a Gujarat advance ruling relating to availability of ITC on canteen services provided to employees as well as contractual labor. So this was subsidized. Part of the cost was borne by the taxpayer, while some part was recovered from the employees. So authority held that insofar as that part which is borne by taxpayer and the services are provided to employees, credit will be available. But credit will not be available where some portion is recovered from the employees, and credit will further not be available in that canteen services which are related to contractual labor. By holding that contractual labor, with contractual labor, there is no employer-employee relationship. So in our view, again, this is also not correct, because with contractual labor also there is employer-employee relationship, albeit this is through the contractor. Next, we come to Kamaraj Port, Tamil Nadu advance ruling. So the port had taken long-term lease of a constructed space from Chennai Port Trust, and this was used for business, and the lease amount, entire lease premium, was paid upfront. So the authority held that yes, credit would be available in this case, because the lease premium which has been paid has nothing to do with the construction, and it is only the renting for business purpose. In case of Ola Electric, again Tamil Nadu AR, Ola Tamil Nadu unit was manufacturing electric vehicles, and they gave rights to their Karnataka cost center to carry out integration, testing, installation, and marketing of software on such vehicles. And this activity was for a consideration. So authority held that this is a transaction between two related distinct persons, and there is a consideration involved. This is falls under supply, which is exigible to GST. Next is the Merkara Downs Golf Club. This is a Karnataka advance ruling where there was some donation paid to the golf club, and court held that advance ruling authority held that donation, there is no quid pro quo involved, and therefore it is not a supply. And since it is not a supply, the application is not maintainable. So with this, we wrap up our session. We come to the synopsis, the summary of what we discussed. Multiple things we have discussed. One is the guidelines issued for summons, bail and arrest, launching of prosecution. We also discussed GSTR 3B changes to be implemented for August 22 return, and several other changes that need to be undertaken before 30th of September 22. We have also discussed last date for availing ITC, declaring GST credit notes, etc., and LMA amendments to be complied by September 30th. We have also discussed payment of tax under reverse charge on service of renting of residential dwelling and all the issues related thereto. We have also discussed that the Tran 1 period, the opening of portal has been deferred to October 1, 2022. Also, the Supreme Court extension order does not apply to interest on delayed refund. We also discussed that CBIC is contemplating issuing clarification on taxability of cross-charge amongst distinct persons. And lastly, we also discussed the availability of ITC on canteen, bus transportation, and lease premium related matters. So with that, we conclude our session. We thank you all for attending in such large numbers and participating and raising all the queries. We hope that this benefited you, our session, and we look forward to your continuous support in future sessions as well. Thank you. Thank you very much.